All right, everything looking good. We are live. Go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8:06 p.m. Eastern Standard Time on 12/28/2022. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so hopefully everybody had a nice Christmas. Enjoy spending time with their loved ones, friends, family, whatever else you got out there, pets, I don't know. As always, please remember, it's not financial advice. So we're going to talk about our year-end stuff on today's stream. May still do a brief stream on Friday, but we're going to be focused primarily today on our monthly charts and year-end trends. So right now, the most important thing, in my opinion, to be paying attention to, as pretty much always, is TNX and DXY. So right now, TNX came back down, back tested our previous high, found support, front ran the 200 moving averages, and is now on its way back up to the upside. Doesn't have to go to new highs, but it is exhibiting all the things you would expect to see if you were going to see something go to new highs. So that being said, the key areas to watch should be the internal retracements, Fibonacci's, from the top to the bottom. So we've already cleared the 0.5. We're paying attention now to the 618, which is right around 4% once again. We know there's a lot of resistance at this level. We had talked about a deep retrace. We talked about a shallow retrace. But in the end, you guys know that I think that eventually rates are going higher, up to that 5% rate. And obviously that's what the Fed thinks as well. So why is this so important right now? Well, we know that the DXY and TNX have been putting pressure on just about everything. And while the two of them were strong, everything else has looked extremely weak or had trouble rallying or even maintaining current price levels. So here on TNX, monthly, we've broken above the 200 exponential. The 200 exponential has flipped blue. 200 simple is essentially flat at this point in time, and we're above it, so it's very close to flipping blue as well. So we know we're essentially about to confirm, we were in a bear market for, since 1986. So, better part of 30, 40 years. And now we're confirming into a bull market for the first time since we flipped bearish in like 85. So if this is the beginning of a bull market for rates, and we see that confirm on our longer time frames with still plenty of momentum to the upside, even if we go slightly higher, top out, come back down, go sideways for even years after that, we know that we're not necessarily worried as much about where the ceiling comes in, but rather where the floor comes in. So this trend of the bear market in yields or bull market in bonds essentially led us down to zero, to where it was basically zero yield to buy bonds, especially when adjusted for inflation. So we know that the likelihood of putting in a new low is very, very unlikely because we essentially went to zero. Could we possibly get closer to zero? Sure. But it looks like at this point in time, we're breaking out past the previous high. And more likely than not, we're going to move to the upside. Eventually, we're going to top out, whether we already topped out or whether we go up to 20% and top out. That's two extremes. One is it's already done. The other is we're going to go to some ridiculous number that we've never been to before. Eventually, we will top out. Once we do, we come back down. The thing we're going to pay attention to is putting in a higher low. So that's where the floor comes in. So is the floor going to be at 2.7 next time? Is it going to be down here at 1? We don't know. There's a lot of support around this 1.3 level. We have the moving averages around 2.7. But if we come down, if we cool off, and then the new low is 2.7, that's going to long term, the implications of that long term are that money is going to be more expensive going into the future. So if money's more expensive going into the future, time then becomes the enemy of anyone with a loan. The same way inflation makes time your friend if you have a bunch of debt. If you're the debtor, you benefit on the other end of that. So if you have a bunch of debt and there's a bunch of inflation, you benefit from it. If there's a bunch of debt and rates are rising, you suffer from it. So that's the important trend coming from this and why it's so important. And of all that, the thing that we're focused on going into this new year, looking at this monthly chart and seeing what's taking place right here, the most important thing to pay attention to is just think of the Federal Reserve as paying companies or entities to not lend into the economy. Because that's basically what they're doing. If you have access to the Federal Reserve and they set the Fed funds rate at 4%, the Fed is paying you 4% yield to not lend out into the economy. So if you're a bank, you're being incentivized to do something by the Federal Reserve. You can choose not to take this incentive, of course. If you do so, you lend out into the economy, you're going to ask higher rates. You're going to take more risk. So whatever the real, amount that you're willing to give up the Fed's guaranteed free money at 4% is, whether it's 6% or 8% or 10%, the Fed is incentivizing you not to lend into the economy. So when we look at that chart, this 210 chart right here, when we look at this on the monthly and we look at the yellow lines where the Fed pivoted and the white lines where the recession was, just think about how simple the idea is. Well, the Fed pivoted back here, which means they don't need to raise rates anymore, and that rates are actually going to go down going into the future. So the Fed is saying, okay, we've done enough damage to the economy intentionally that now we're going to start lowering the rates back down again, because we see the economy is going into, it's going to slow down going into the future. So the Fed pivots in yellow, and then shortly afterwards, we see a recession. We see the same thing right here. The Fed pivots in 2000. Shortly after, we see a recession. So the Fed is incentivizing, as rates are going to the upside, the Fed is incentivizing banks not to loan into the economy. AKA, the Fed is paying banks not to have economic expansion, which is, essentially what increases GDP and allows you to grow. We see the exact same thing happening again, 2007. Fed, raises rates, incentivizes banks not to loan money. And then finally we get up to that point, the, 2008 GFC, global financial crisis. And then shortly after, the Fed pivots. They say, okay, our job is done. We're going to start lowering rates again. We're going to start re-incentivizing or not unincentivizing banks to loan into the economy. And then shortly after, we go into recession. Same thing happens in 2020. Fed pivots in 2019. End of 2018, starts going a little crazy. Things get wild around Christmas time. And then 2019, Fed pivots. And then obviously shortly afterwards, we're in the Rona recession after that. And then we buy our way out of that one with fiscal and monetary stimulus. And now we're basically counting on this early 2023 Fed pivot. So what is the actual Fed pivot? It's the Fed saying, okay, we did our job. We've done enough damage. We've incentivized the banks for long enough with enough interest to not loan into the economy. And we know, obviously, that the money they're loaning into the economy is what's causing economic expansion. Because what are people using that money for? They're using for, start businesses, buy homes, etc. So going into the future, it's obvious that what we need to look out for is that recession. Now, the real question is, does the recession come in late 2023? Does it come in early 2024, etc.? That doesn't really matter, honestly. As long as we know it's coming, we can prepare accordingly. So that's what we're seeing from TMX right now. This thing is still surging to the upside. It's taking out previous lows. It's breaking out of clear resistance. And then we see obviously the 2 and 10 telling us, hey, the bond market actually might be in really bad shape for a really long time. If you're talking about speculating on, fake bonds or using an ETF or something like that, because rates going to be continually going up into the future. So the moment that the Fed stops incentivizing these banks not to loan out, aka giving them money to just park their assets at the Federal Reserve instead of using their balance sheets to loan out money into the economy and expand. So as soon as we see that pivot take place, the question is not, is it going to go down? Are rates going to go down? Are we going to see, a reversion back to the mean? We know that. We know that's going to happen. The question is to watch to see where the next bottom is at. Do we set a new floor at 1.4? Do we set a new floor all the way down here at, whatever, 0.5, 1%, etc.? So that's what we need to look out for going into the future. Now we're going to jump over here really quick and we're going to look at DXY, because DXY got ahead of TMX. They were obviously rising together all year long. DXY had a pretty strong retracement, made it to the 200s well before TNX, and then TNX started to fall aggressively and actually has rallied quite a bit off the lows. DXY is still hanging out at the lows. I don't think people are giving enough credit to the weakness in the DXY as essentially Japan fighting back, aka devaluing their own currency for years, to basically put a floor under interest rates, and now they have stopped that. So people always talk about, until something breaks. Until something breaks. You always hear that expression. Until something breaks. The Fed is going to tighten until something breaks. Something broke. I mean, the Japanese central bank had to reverse policy that's been in place for a long time. So that's important. So we're seeing pressure in the system. We're below the 200 exponential for now. 200 exponential has flipped bearish. 200 simple is above our heads here. We've put in quite a bit of bullish divergence here on the daily. It looks like we're ready for some kind of bounce. The question is, do we bounce and then come up to a lower high and then get rejected and go lower, go into a daily, weekly, monthly bear market? Or this is our monthly chart now. Do we continue, what essentially just started? And I say that because, we've been in a downtrend for a long, long time. We see the moving averages on the monthly. And then essentially we broke above the 200 exponential in 2014. Then shortly afterwards, 2015, above the 200 simple. We back tested them both in 2017, 2018. They held the support. We put in another higher low during the Rona dump right here. And then we broke out above clear resistance. So does this look now on the monthly like a blow off top? Sure, I could definitely see this being a blow off top. The question is, when it blows off, does it come back down to our recent support level, hold, and then go higher, since now we're in a monthly bull market? Or does it top out right here, macro top, come back down, reset, retrace for months, even years to come, and then eventually go higher over time? Because all that really matters is a series of higher lows and higher highs. So we're very much still in a bull market. We've had this channel on here many times. I'm not going to worry about it right now. We've had this ascending channel right here for a long time now, and all it really relies on is just an ascending support and ascending resistance, and we're basically just going up inside that channel. So we reach the top of the channel here, makes sense, we're going to come back down, find some support, and then go higher. The real question is, if the DXY reverses, if we do find some support around here, while we're seeing weakness in all of these speculative markets, stock markets, crypto, etc., what's going to happen if this strengthens again? Because a lot of the argument people are making is based on the fact that the dollar has topped, it's going to come back down and get weak. Going into the future, it's going to continue to get weaker and weaker. That causes a lot of actual pressure on businesses, and then can, affect earnings going into the future, exchange rate, all that good stuff as well. So definitely worth paying attention to. If we see any strength in the dollar going forward, what that looks like in conjunction with rates and what that looks like for markets. Because it's not crazy to think, hypothetically, the dollar has topped out on the macro, at least for now. For the next couple of years, it's not going to go to a new high. But it's still going to have a potential surge back to the upside, a short squeeze, something like that. And then we see the effect it has on markets, a sharp and sudden drop on markets, etc. and then we go lower over time as the pressure comes off this. The economic situation worldwide continues to develop, and then eventually, we can see markets moving back up to new highs, potentially new bull market, all that good stuff. But it's important we pay attention to what the driving forces are behind this stuff. So, what's going on, Darwood? Good to see you. That's right. Smash the like. All right, so let's look at oil. So oil looks a lot like the dollar. Basically topped out, been falling below the 200 exponential and simple now. This one's a little further along in the cycle, confirming into a bear market. Had a push up here across the 821 bullish, trying to make moves, really just back testing resistance. So the real question is, how much higher does this go? And when it does, likely gets rejected and then continues lower. So we see a high, a low, a lower high, a lower low, a lower high again, a lower low again, likely another lower high, followed by another lower low, until eventually the cycle ends and we break out and start going back to the upside. When is that going to be? We have no idea, but in the meantime, there's nothing here telling us, based on technicals, that oil is going to suddenly surge back to the upside. It's in a downtrend. Same situation as the dollar, though. Eventually, if we break through this downtrend, it's possible we get another pushback up here to just put in another lower high. So is $100 a barrel oil out of the question for next year? I don't think so at all. Does it have to go to new cycle highs or new all-time highs? No. I mean, honestly, oil can do a lot of stuff right now. And there's a lot of macro factors pushing and pulling on oil as well. We had a lot of factors this year, such as, drawing on the strategic petroleum reserves. And we're going to have the opposite factor going into the future where, theoretically we'd be refilling those reserves at some point in time. So we may see our best friend become our worst enemy. And it's important that we tie all of the, stuff going on in the markets with geopolitics as well. What's that going to look like going into, an election year, et cetera, all that good stuff. So very complicated time in markets. So VIX Volatility Index still hanging out at the lows right here. We had the quick move back up to retest the 200s. We're expecting at some point in time a volatility explosion back to the upside. If we're seeing this much pressure on the markets over the last couple days, weeks, at this point in time, pretty much month, while the dollar is essentially sideways or weak, what's going to happen if the dollar strengthens once again? So let's go to our longer time frames. We're going to pay attention to the monthly on the Dow Jones. So it's very important. We had lost 821 here. We V-bottomed, reclaimed it, went to new all-time highs. We lost 821 here recently. We V-bottomed, almost bullishly engulfing on the monthly. Shot up here back above the 821. And now, we surged for another month after that. Now we're back testing it as support. If it holds as support, we likely go to new all-time highs. If it doesn't hold as support, it's just going to look like a high, a low, a lower high, and then likely a new lower low is in store. Where is that going to be? I mean, there's still a ways down here on the Dow, lots of potential targets. The initial one was our previous top from 2020. We have, a bunch of various targets as well, but you would think potentially somewhere around like that 26,000 level. If we go to the downside, to new lows, new highs is easy. We can just fib our most recent move. Right now, it looks like it's trying to carve out a bottom and move to the upside. Obviously, momentum, reclaiming the 821 is definitely a big deal. But the truth is, we've been sort of talking about how the Dow is strong and everything else is weak. And this might be potentially lying to us. Or at least seeing, that sort of musical chairs, that kind of funnel effect, where there's a lot less money in the markets, but it's going to less places. So something like the Dow looks strong relative to the rest of the stock market, but actually isn't in great shape. So it's trying to actually confirm into the bull market right here. Let's look over at the SPY now. SPY much weaker, rejected at the 200s. Back down here, only a couple percentage off its lows. When we go out to the monthly, we had the long bull trend. We saw the bear cross, and then we pushed up to it, got rejected, and now we see a massive bearish engulfing candle. We still have 2 days left till Friday's close on this thing. But the truth is, this looks like a very clear rejection. And, we obviously lower highs, lower lows. We know the next target is a new lower low. So it looks to me like the S&P is setting up to retest the pre-Rona highs at 323 on the SPY. And the truth is, looking at the Qs right now on the daily, we're basically at the lows. We're at the cycle lows right now on the NASDAQ. Triple Qs. And again, when we look at this monthly, I mean, that looks absolutely terrible. A clear downtrend, confirmation into, the bear market on the monthly based on the 821 cross or daily, weekly, however you want to look at it. The 821 bear crossed. The Dow Jones reclaimed it and started pushing back up. Here we got rejected and we put in new lows, got rejected again. And now bearish engulfing candle at new lows if we just close the monthly candle tomorrow. And we can see clear support down here at about 220. Seems likely that we're ready for another leg down. These other indices look absolutely terrible right now. Very, very weak. And then we have the Russell. The Russell did not take out the low when we came down here, which was something that the rest of the market major indices did. Took out the low when they pushed back down here again. Russell's been holding up, but it did put in another lower high. It's holding temporary support right here, but seems very, very likely we're coming back down to the lows again. And then that's just going to look like a giant descending channel. Triangle, after a leg to the downside, setting us up for another leg to the downside. Losing momentum, clearly looking on the monthly chart like a rejection. We push all the way back up, can't get above it. Clear rejection, very, very powerful rejection. And again, very close to new lows. So everybody that's calling for, the bottom in the stock market, I don't know what they're looking at. I mean, if it's the Dow Jones or a couple of the lead players inside of it, I can agree that they're telling us, they're painting a picture that's a lot rosier than everything else is. Does that mean that they can't outperform? No, I mean, there's definitely a world where Dow Jones goes to new all-time highs in 2023, 2024, and no other major market indexes do. I don't know that's going to happen, but it's definitely a possibility that nobody's paying attention to. Russell looks very, very weak. Very weak, threatening the lows. So XLE had a nice push up here with the recent move in oil. And, obviously there's still a big narrative going on, the energy shortage. Who knows what's going to shock these things to the next big move to the upside or downside accordingly. We know at this point in time, it looks like a failed breakout. We basically come back up to highs, push up here, and then come back down. Support is holding for now. So we'll have to see where this ends up. But again, if we zoom out here and look at our longer time frames, the monthly, I mean, it looks a little bit tired here, but it did reclaim the 200 exponential and simple. We did get a retest of a 200 simple already. Since then, we put in a new high. If we're going to come back down, the real question is, do we make it all the way to a 200 exponential? But the truth is, when and if we do get down to those levels to retest the 200s, I would expect, a higher low and support before continuing higher. It's been a long time of trying to break out. Since 2008, we go slightly higher in 2014, and then here we are back at those same levels again. So if we do break out to the upside, which I think eventually we do, if and when that happens, this thing is setting up for a big leg to the upside. I mean, we could look at it as a 1.236 fib extension from the all-time high to the low right here. Oh, it's already on there. I'm sorry. So we have the 1.236 up here at about 101, just above 100. So worth paying attention to. We see some temporary weakness for now. But the truth is, this probably is setting up for new all-time highs. We don't need to look at any of this stuff. We already took a look at the 210. Okay. So let's come down here. We'll take a look at Tesla. So obviously, we have been discussing Tesla for some time. So how this is set up now, we basically had this descending channel, the big one. And then inside of that, we had this little one in white right here. And we fell out the bottom of the yellow descending channel. We talked about the potential for that long trade from the bottom of the channel back to the top of the channel. We talked about the measure move if we broke down from that channel. Now, obviously, in hindsight, we broke down from that channel. We came down to that other clear fib that we were watching, the yellow box area. That, again, just looked very, very weak. So we've been sitting on the sidelines since. We have now, since then, we have our red measure move right here. We have now, since then, essentially completed the measure move. We made it down here not only to that measure move, but when we zoom out here and we look at our fibs, we know we have the Rona low fibs in blue, and then we have the lower low fibs from 2019 in green. So the market has been paying attention to both of those fib levels. We see the blue fibs tested through here. We see the green through here. We break down through the blue fib right here. Doesn't get a lot of respect. And then here we are at the 382 in green. We also have the 0.5 in blue, slightly lower. So we've now blown through one target and hit the next one, which, depending on which fib you're looking at, is either a 38.2% or 50% Charles Dow theory retrace of either this wave up or this wave up, depending on how you're looking at it. But essentially, Tesla has had a pretty deep retracement to a very technical level. The only problem is right now, and I try not to mix fundamentals and technicals too much. The only problem right now is that part of Tesla's appeal was the cult. And to tell you the truth, Elon has basically, I don't want to say he's betrayed the cult, but there's a weird dynamic going on. I mean, the exact people, arguably the left, that love Elon and exhibit this cult-like mentality are now the exact people that he's isolating. So there's a real macro shift fundamentally with Tesla in the sense that a lot of people, if they're going to pick a bridge to die on, it has to do with politics or, global warming or whatever the situation is, whatever it is, something that they're passionate about. Well, a lot of the people that were passionate about Tesla are on the other side of that, pick a bridge to die on right now. So the truth is, fundamentally, Tesla's in a bad place right now. And we don't know when and if it's going to recover. Technically, I mean, this is the area we've been looking for, was around this $100 level. Now, when I'm not sure about something on shorter time frames, I'll go out to the longer time frame and take a look and see what it looks like. So here we are on the monthly time frame. And, we got the hard sell signal back up here, went to a slightly higher high after that. And then, since then, the Stochs have just been powerfully angled to the downside. Same with the histogram. We push slightly higher, and then we saw the histogram roll over. We didn't print bearish divergence on the histogram, but we did on the Stochs at that previous high. Since then, it's been nothing but weakness. Lower highs and lower lows. And now we broke down. We lost the trend. The 821 have flipped bearish. We have broken down. And now, each of these candles here is just a month of support with no help. No help. So the problem with this situation is, if we do get down to this level, right around like 196, whatever, let's say we find some support right around there. That's our 382, our 0.5 of those key fib levels, either from here or from here. You can see obviously. If and when we do break down and find some support, it's probably just temporary support because there's almost no actual buying that took place below that. The first time we really have like an overlap of candles is all the way back down here at like that $47 range. So in my opinion, yeah, we're at some kind of support right now. There's probably some kind of dead cat bounce in the making sometime in the near future. But there's definitely a world where this thing is under $50 here in 2023. No, that's not my base case necessarily. Is there an equal number of people that are ready to take the place of the old cult members if Elon, switches sides and starts batting for the other team? I don't know. I honestly don't think so. A lot of times, too, when you build up that momentum, with that cult-like mentality, you reach that maximum velocity and you're never going to get that back again, which is how things never go to new all-time highs. Now, I'm not saying that's the case for Tesla, but there's a strong case that there's still going to be a couple legs down here. And when we look at this monthly, it doesn't look particularly good. If we go out to the weekly, we've lost the 200 exponential and simple. At some point in time, we would expect a back test of those levels. Is that going to be our dead cat bounce? Are we getting close to that? Is there exhaustion in the selling? Yeah, I mean, there definitely is. There definitely is. And that's essentially the back test of key levels that we had discussed. But the truth is, I mean, you're catching a falling knife on this thing for sure. You now not only have the technicals fighting against you, but you got the fundamentals on the other side as well. So over to Microsoft. So obviously we had a nice scalp on Microsoft, quick little 20-something%. Got rejected off the 200s, got rejected off the descending resistance, got rejected off the 382. And where we headed? Back to the lows, back to the 0.5, back to our last entry. And, you know, we know as long as we're consistently putting in lower highs and lower lows, the next target is just a new low. So we hit our 0.5 low. We had a nice scalp trade off of it. If we continue to see weakness in Microsoft, which seems likely, we would expect like 193, the 618 to be our target. If we flip out here to the monthly, we're well off of the 200 moving averages. I mean, this thing went parabolic since the low in 2009, and we're way off the 200s. And it very clearly looks like we flip into the bear market here based on the 821 bear cross on the monthly. We backtest it. We get rejected. It's looking like a bearish engulfing candle with less than 2 days left to go. So where's Microsoft going? I mean, just our next target to downside. It points right to the 618, right around here. Previous support from 2020. And then that's when we're going to look for our next scalp. So the same way, you know, these scalps have worked out beautifully. We hit that beautiful scalp off of 242. We hit that beautiful scalp off of that 215 level. So the 382 and the 0.5. And the next scalp we have set up is off the 618. Were we getting a little cocky with this target back to the upside? Is it going to be a 37% move? Or is it just going to be a back test of the breakdown from this level around like 231, roughly where we're at right now? I think that's a responsible thing to say, is if we come back down to the 618, we run a tight stop around 4%. We're looking for about a 20% retest, a back test of support that we're potentially getting ready to lose. Maybe. We'll see. But that gives us about a 5.6 to 1 risk reward ratio from that level. So that puts me at a buyer at the 618 at about 192. We'll see what it looks like when we get there, obviously. We're in the bearish control zone, getting beat down pretty heavy. Not crazy to think we go to a new low over the next month or two. But again, decent amount of support, some confluence with that little wick right here. It's nothing crazy, but on the monthly, could be a definite opportunity once again. But the truth is, you know, what are we expecting after that? You know, we just want to get in, get off, get out, because we're just expecting lower lows until something changes. And the only thing that's really been looking like it was going to change was the Dow Jones and a couple of those big names inside. And even that's starting to show some weakness now as well. So Apple, you guys know my position on Apple, obviously. So we shorted the top for that little push up here. Obviously, it looked either really, really obvious that it was a perfect short, or it looked like it was going to new all-time highs. So we took profits on the initial push down, locked in that almost 20%, 17.5% gain. And then we said over and over again the entire time, if we get back above the 200 exponential and simple and start to consolidate above those levels, we're going to close the short, lock in the remainder of the position at a small profit, but just get out of the way in case Apple did do something crazy and go to new all-time highs. Obviously, that was not the case, so we still have the remainder of the trade setup open, and obviously target to downside is our macro 382 down here. So we shorted from the top here to the 236 and the yellow support, and we still have the remainder of the short position open, and the target is the 382 or our red support right here, and we're almost there. We're almost there. So looking nice right now. 25%, 26% almost if we locked it in now. But the truth is, a couple more percent to the downside is really what we're looking for. About 31.5% target. And we'll take profits somewhere around like that 116 level, something like that. Could it go lower after that? Sure, but I think that it consolidated long enough from back here in 2020 and found support right here that when we do get to that level, there's going to be a lot of other people like me that are, I don't want to say eager to lock in their profits, but, you know, ready, willing, and able to do so. So when we do get down to those levels, we're going to lock in our gains right here, potentially even flip long for a scalp back to the upside, you know, potentially a retest of the breakdown level, something like 17%. To be counter trend trade, obviously. So we'll have to run a type stop loss, but I don't think it's unrealistic to think we could get easily a 3, 4, or even 5 to 1 risk reward ratio for a bounce off that. So essentially, when we get down here, other people, including myself, are going to be closing our short position, taking profits, you know, and then we can just flip from net short or flat, however you're doing it, to net long, lock in those gains, and then just re-enter a short back from here. You know, obviously no tax implications. You got to figure all that stuff out for yourself. I'm not your tax attorney or all that good stuff. So Apple, yeah, I mean, you know, and again, Apple's one of those ones where if you look at the fundamentals right now, they're not particularly great. You know, and this is what it felt like in, you know, dot-com bubble burst 2008 This is what it feels like when all of a sudden you start looking at the charts and the charts don't look so hot. And then you start looking at the fundamentals and go, man, they don't look so great either. Even if there is a narrative, it's going to be hard to build this up and get it positive again. So Apple, very close now to confirming that 821 bear cross, very close to putting in new cycle lows based on a candle close on the monthly, already putting in literally new cycle lows today. So do you want to buy the bottom on Apple right now? No, definitely not. You want to try to scalp this move, this take profit level? I mean, what's that really going to look like? The truth is, we come down here to the 382, we hit our target, we take profits at 115, and then we back test, the exact move we just talked about, where we basically bounce that 382, back test the breakdown, which is, essentially where we're just at right here. And what is that really? It's just a breakdown, hit a technical level, a back test of the 821, try to stop the cross from happening, get rejected potentially, and then continue on to lower lows. So, that's essentially just using what's happening on our monthly chart to just plan out our next couple trades on Apple. And then obviously if things are lining up, we'll take those trades. If not, maybe we skip one here or there. I don't often love to just flip left and right back between an asset. A lot of times after I lock in gains on an asset, I'll just sit it out for a little bit. So you don't have to be eager to just always be long or short on something, whether you like it or hate it. Sometimes it's okay to just be on the side. So Google next. So it's threatening the lows right now, the 0.5. You guys know, obviously, the next leg down is the 618. That's our target at 76.50. So that's what I'm looking for. I honestly am a buyer on a lot of these tech stocks at some point in time, but I don't think we have to be the first buyer. I don't think we have to buy every dip on this stuff. I mean, obviously, it's worked out so far. But, in hindsight, let's say we never put in a new low and it's like, see, that was the dip I should have bought. Well, how do you know in real time? Because you would have thought, buy this one, buy this one, buy this one. Oops. Buy this one, buy this one, buy this one, buy this one. Yay. Oops. Buy this one, buy this one. Oops. Buy this one. Yay. Oops. I mean, so as long as we're just continuing to put in lower highs and lower lows, we have to look at anything that's in a downtrend as a scalp position. We have to run super tight stops. We have to be ready to just admit we were wrong about a trade setup and just chalk it up as an L. Especially when we're counter trend trading, because we know the probability of success is much, much lower. So that being said, Google looks very weak right now. We have some further targets to the downside. When we flip out to the monthly, these tech stocks are starting to look pretty brutal. Now, keep in mind on these monthly charts, going back to dinosaur days, these things are up and to the right. So they're always on a monthly. Most these real decent assets always on the monthly going to be up and to the right. So sure, as long as the 200s are in an uptrend and blue, we're definitely still in a monthly bull trend. But when we're looking at a monthly chart and we see the 821 bear cross, we still want to be net long those assets. Like, I'm not just saying, oh, it's it for Google, it's a dead asset now, it's going to go the way of XRP and go extinct, all the cult members going to slowly fade, self-terminate, whatever. No, I'm not saying that about Google at all. It's still very much bullish. But even on the monthly time frame, when we look at the 821, our shorter time frame moving averages, they're very clearly in a bear trend. So even if we're still net long or net bullish on this, we don't want to be involved when the 821 bear cross happens, because that's when the real damage gets done. The whole fucking time from 2009 to 2022, we're bullish. And I think sometimes people find the channel, sometime in the last 3 years and they go, oh, this guy's always bearish. What the hell? He was only bullish until the top was in and he's been bearish ever since. Well, sure, because you didn't find me, during this whole entire 13-year period because I didn't have a YouTube channel. So, of course, I'd have been very, very bullish here. You guys see my strategy. I don't hide it. I give it away for free. You see what it is. That's 997%, 1,000% upside in the bull market. What we're trying to do, what my strategy is all about, the whole purpose of everything we discuss and these indicators that we designed to make it simple and easy, the whole purpose of them is to avoid this. That's it. And right now, they're doing the best fucking job in the whole world, because all the fundamentals, all the technicals, all the fame, the fortune, all that bullshit couldn't give you a technical reason why you don't want to be long these assets. But I mean, 2 green lines on a chart sure do when they flip red. I mean, it's simple. Gotta keep it simple. This is the most dangerous time to be involved in these assets. So the last thing we want to do is be involved with these assets. And sure, you could definitely look back at a situation like this and say, well, wait a minute. Hang on a minute. If you sold right here, which, technically based on the 821 cross would have been right here, you would have sold on the monthly open. You dodged 47% downside. So you avoided 47% losses. But wait a minute. Without cherry picking, if we use this strategy though, you didn't technically buy back in until right here, right? The 821 green cross happens again. So you didn't buy into, so you really only avoided 5% downside, right? So who cares? Why not just hodl? The difference is you didn't have to look at your account when it's down 50 something percent. And you had all the opportunity in the world to, say, hey, you know what? Actually, I'm going to add to this in my retirement fund. Actually, I'm going to just say F it because I have a 10-year time horizon or 20-year or 50-year time horizon. I'm just going to buy the dip because I feel like it. You can do whatever you want. You can supersede the rules whenever you want. You can pick any other point in time for an entry without using the monthly to get out and monthly to get back in. That's completely fine. But once you know the rules, feel free to break them all you want, but learn the rules first. That's all we ask. And then we go down to a daily time frame or weekly time frame or something like that. We could see easily how we would get a better entry than that. But the most important thing, the number one most important thing is that we avoid the 50% downside. Even if we buy back in at the same price, I promise you, if your portfolio is down 50%, you're not going to sleep as good at night as if you're on the sidelines and you're down none. I promise you that. If you rebuy 5% cheaper or even at the same price, or let's say even 5% higher, but you didn't have to sleep through 6 months, 9 months, a year of your portfolio being absolutely fucking wrecked, I promise you, you just saved your, that you always hear like, oh, that just added 5 years to your life, or oh, every pack of cigarettes you smoke takes 3 days off your life. I'm just making stuff up. Those aren't real numbers. Well, every time you avoid one of these bear crosses, 821 on your portfolio or on an asset class or a major index, you just added 5 years to your life. So if you hate your wife and kids, maybe just sit through these. But if you're anybody else and you find any joy still on planet Earth or any potential joy possibly in the future, do your best to avoid 821 bear crosses on a monthly time frame. I promise you won't regret it. So what's going to happen? I mean, I don't know. I don't honestly, are we going to break down here and go down 50%? I mean, we're down 25% from when the bear cross happened on Google. So, what is 50%? A retest of the moving averages, 50, 55%, $50 Google. I mean, we're at 86 right now. If you're not like, jumping out of windows at 86, are you going to jump out at 50? I don't know. But I mean, why find out? Why wait and see? So again, long term, I like Google. I like a lot of these assets. I appreciate the platform and everything. But we're threatening the lows. We're in a bear market. Everything is pointing to the downside. Meta. So Meta had that capitulation, came back up, closed the gap, and is hanging out at resistance. I actually don't hate this setup right here. Obviously, you guys know I'm not a fan of Meta. The stock, the actual chart looks like complete trash for sure. But the truth is, the way it's hanging out right here and kind of creeping higher, and this drop right here, we talked about at the time, how this basically looked like capitulation down to a key level. If we continue to hang out here at resistance, I think the probability of a crazy short squeeze on Meta and a backtest of resistance goes up substantially. So again, you guys know I am not a fan of Meta. I don't mind lizards, not a big fan of lizard people. That being said, obviously speculation as to lizard involvement. But the truth is, and obviously I'm joking. But also, who knows, right? 37% upside just to backtest that previous resistance. We can run a tight stop here one way or another. If we lose this 109 level, that's basically a clear line in the sand. Hey, this is probably going to break back down, continue back down to the lows again. So we run a 6% stop, 38% upside, 6.271 counter trend. Is it over 3-1? Yep. So it's really not a bad setup from this level if you are looking to scalp. If you do think, maybe Meta already bottomed and it's just, all upside from here. In my opinion, we basically blew through the 382 on that capitulation, almost made it to the 0.5, and now we're basically back testing that level. So in my opinion, we go lower from here. We likely go lower from here. But the truth is, our job basically as traders is not necessarily to have an opinion one way or another on a trade setup, but to look for probable, advantages, ideal risk reward scenarios where we can risk very little to have, asymmetric returns. And the truth is, there's an argument for that, or at least a trade setup. The truth is, really, what are we looking at? Well, okay, if this thing is bullish and moves back to the upside, it retests resistance. So sure, 38% upside. But the truth is, what if it doesn't? We retest the lows, that's 25% downside. So 38% to 24% isn't even 2 to 1. So that's a lot less ideal. But what we know is that, okay, if the bullish scenario is playing out and we're going to break back to the upside, the line in the sand for when that's no longer a viable argument, excuse, trade setup is if we take out this swing low right here. So realistically, if we just come back and take out this little stutter step that we have right here, there's nothing supporting us because there was a gap down right here and then there was, basically a gap back up. So if that area breaks, we'll be right down here. And then at that point in time, we're a couple percent off the lows. So that's why we can draw our line way up here in the sand. We don't have to say, oh, well, actually, the lows are going to be our stop loss. And if we break down to new lows, we'll take our 24% loss and get out of the way. But we're still looking for 30. No, that's not a viable trade setup. That's what could potentially happen. So you could argue the same thing. Well, then, honestly, I hate Meta. I think it's trash, and it's going straight to zero. Mark Zuckerberg is a moron, and he is definitely a lizard. So I'm shorting this thing. I'm shorting it to zero. Okay, fine. There's a strong argument to be made for the metaverse blowing and nobody wanting it. And also, Zuckerberg being a lizard. He does drink water awfully strange, or pretends to drink water. Rumor has it he sits on a heat pad. I don't know if that's true. That's completely made up on the spot rumor by me. So I can't verify that, but it does kind of make sense. Rumor has it there's heated blankets in his home as well. A lot of lizard tendencies. That being said, so you hate Zuckerberg and you want to short Meta. Okay, you could do the exact same thing in the opposite direction. You could enter both these trades. You could use options to do this. The truth is, right where we're at right now, you want to enter a short? Sure. If we take out the upside right here, if we break through this blue line, you want to be out of that trade. So that's 9.5% stop loss. And you're targeting not only new lows, but you're targeting the 0.5, the next key fib, aka the blue box, which obviously those always get hit 99% of the time, works every time. So, okay, that's your target to the downside. So you end up with a risk reward. Sorry, let me pull this up here so you can actually see. You end up with a risk reward of 29% downside, 9%, 9.5% stop loss. That gives you a 3 to 1 risk reward ratio. You're taking a short, which is in the direction of the trend. Obviously, we're in a bear market. We're below the 200s, getting absolutely wrecked. So you're trading with the trend. You're getting over a 2 to 1 risk reward ratio. You're getting 3 to 1. Perfectly viable trade setup right there. So that's the beauty of these markets. A lot of times you can find a trade setup to the upside, a trade setup to the downside, and, take your pick or trade both of them. Doesn't always have to be, I think we're going to go up, so I'm betting on upside. I think we're going down, so I'm betting on downside. Sometimes it'd be, I don't know, markets are crazy and irrational and they can do anything, so I'm taking both bets. Or I'll flip a coin and take one of them, or I'll take the one with the best risk reward ratio. Honestly, say you're going to put one lot into Meta and you can't decide short or long, put a half in each direction, see how it goes. Or again, look at the ranges, use options. Lots and lots of potential here for trade setups. Don't have to be always looking for the bounce back to the upside. Don't always have to be negative on everything. The key has been able to just identify these risk reward trade setups and then just pick the good ones. You're like, you know what? Honestly, I don't like either one of these. I don't like that I don't have a decisive direction that it looks like Meta is going to break in. So I'll just sit this one out. Or you know what? I was raised in a family that doesn't bet against lizards. So I'm not betting against Meta, whatever the scenario is. The key is to have those tools at your disposal and then be able to pick. So Amazon is next here. Amazon broke to new lows today. Definitely a big deal. Definitely a big deal. Just looking disgusting on longer time frames. So we talked about this potential scenario, obviously, a long time ago before we broke down here, of, basically the complete round trip. And again, specific example, say you want to get bearish on Amazon when the 821 bear cross happens, down 51%. So, not a bad strategy to just get out of the way when you're in the danger zone. How do we know when to get back in? When do we buy again? Depending on what time frame you're looking at, we can use the 821 or the 200s. So here on the monthly, when we look at this, obviously it's very beaten down, but how long have we been bullish on Amazon for? Since 2009. So we had a good run, 13 years to the upside, and then we got bearish on it right back here. So we've been bearish on it. It's melted down since then. No signs of a bottom, at least for now. There's some key support here around like 73. At this point in time, hard to believe we're not going to get to the 200s at this point in time. Maybe we front run the 200 at 65. Maybe we front run the 200 simple at, 50. Maybe we don't get all the way there. Maybe we want to take a scalp out of these levels. Could go either way. If we end up with a situation like this where it gets wrecked, 2000.com bubble burst, and we go down, 95%, getting in at 50% down is not going to seem so hot. Is Amazon going to do that again? I don't know, but it's probably going to post a net loss for the year. So if you think all of the negative information is priced in already on Amazon, get ready for this next earnings season to post a net loss for 2022. And we talked about that in great depth in a recent video. All right, so let's do some other stuff. 52 minutes in. Okay. Durwood, hopefully you're doing well. Hopefully everybody had a great time with their family for the holidays. Enjoy the holiday stream. What's up, Bodie? Good to see you. Only bullish till the top comes in. I know, right? I don't understand why more people don't use that strategy. Yeah, avoid the drawdown. 100%, dude. Just save your account. Use the technical analysis, save your account. Or if other forms of TNA help save your account as well, I wouldn't shrug those off, okay? But that's the truth though, really. If you ask any good, investor, trader, financial advisor over time, what's more important, picking winners and making money or avoiding drawdowns? Everyone will tell you the exact same thing. Everyone will tell you avoid drawdowns. So our whole entire strategy is based on the simple practice of wins and losses, small wins and losses, balance each other out. Big losses don't happen because we avoid the drawdowns. That's the whole point of momentum or directional trading strategy, investing strategy. And then after that, if we don't ever take any big losses, the small losses and small gains cancel each other out. All that's left is big gains. So easy. Just do that. And if you don't know how, just watch the thing and do the stuff. So gold has been fairly strong, fairly resilient. I think the main issue with gold here, though, is we did put in a low. We did basically retest that high, and then we did put in a new low. So the truth is, until we basically take out the all-time high, people, investors, strategists, traders, whatever you want to call them, are not going to consider gold to be in a bull market. Now, you could argue it's back above 200 exponential and simple, but it also had a couple of those already. So I don't think the real confidence is going to come in on gold until we take out the previous high. Because that's basically invalidating the downtrend and also a blue sky breakout. There's also a lot of bearish divergence here on the daily. We put in a high, then lower high, lower high, lower high, lower high, and we put in a high, then higher high, higher high, higher high. So this does not seem sustainable to me. And the truth is, the dollar has been getting absolutely wrecked. Gold had a nice little run back to the upside. If the dollar starts to strengthen again, it's not crazy to think that gold's going to lose this level and then, lose the 200s. And all of a sudden, this is going to start looking pretty gross again. If we do look at the monthly, though, gold looking a lot more like the Dow Jones than some of these other trash indices. Broke back above the 821, trying to avert the bear cross. So the Gold's goal right now, the most important thing gold can do is just like full on like 1990s speed. Okay, not the movie, not the you guys know, not that. Okay, not the amphetamines. I'm talking about the movie, the Sandra Bullock, Keanu Reeves special. Stay above 50. Okay, but for gold, it's 1775. Stay above 1775. Cross this back to the upside, and then just hold there. And eventually, new all-time highs are coming. If not, we really have to worry about, this scenario. And obviously, avoid drawdowns. So just get out of the way of the 821 bear crosses in real time. So silver got a little bit ahead of itself. Again, we see some minor bearish divergence here on the daily. Doesn't look nearly as bad as gold. Daily time frame starting to confirm back bullish. Monthly time frame looks just absolutely disgusting. If you look at this chart right here, and I'm like, you can't see what it is, and you're like, hey, what's this chart of? And I'm like, XRP. And you're like, no, it's silver. And I'm like, oh, okay, it's real life XRP. That's exactly my point too. You're like, wait a minute, you said you don't hate silver. I don't hate XRP either, but the chart looks like shit. It's like the worst thing you could have ever bought, unless you bought down here, which, I mean, the truth is, this thing looks rough. And you're like, well, it was just overvalued back here and now it's just fair valued. Or, oh, it was just fair value back here and now it's manipulated. Whatever. Who cares? The fact of the matter is, silver had a strong bounce off the 200 exponential and simple, and it put in a higher low. That's very, very good. And eventually, if it puts in a higher high above that $28, $30 mark, that's very, very good. And probably goes to 50 shortly after that. And then probably 90 new all-time highs, etc. I don't know when that's going to happen. This looks okay. The monthly, is basically leaving the bearish control zone, about to get a hard buy signal. Knife is pretty powerfully angled to the upside. So is this a dead cat bounce? I mean, to tell you the truth, getting back above like 22, 23 was very, very strong. And it does look like it really wants to retest like 25 up here. But the truth is, this is really a double top right here. Clear rejection in the middle. And then just a low, a lower high, a lower low. And until we take out at least that $25 mark on a monthly time frame, close, something like that, it's not going to look like we're even potentially breaking out from that. Once we get above 25, I think 30 is right around the corner. And then if we get above 30, I really do think silver shoots straight up to 50. Because there's just not, there's some resistance up at the level from this distribution that took place and whatnot in 2011. But there's a lot of people banking on that big move back up here. And we're to the point now where it's really only a few candles. This big consolidation from 2011 is all resistance, and that's what we've been banging our head on. But if we continue to put in higher lows, silver actually is like building some constructive price action. Now, you guys know how I feel about silver. It's trash until it's not. But this is a gigantic cup and handle. And again, if we do get up to that $50, we did a breakdown on silver, put our targets in there. You guys know I'm bullish on silver. My target's like $1,100. I'm just kidding. I made that up. Silver will never get to $1,100. Ever. Silver juniors trying to break above the 200. It's really struggling right here. Obviously, we talked about this trade setup, the move back up to the top. Nice, thick, juicy 66% for anybody that was down here bottom feeding on these trash juniors as they hit some key levels. The truth is, though, if silver goes into like an actual real bull market and starts breaking above like $30, silver juniors are going to be ridiculous. But we have plenty of time to find out. So GSG consistently putting in lower highs and lower lows. This is a little bit of commodities with some energy splashed in. Trying to build some momentum here below the 200s. 821 bull cross happening. This looks like a, basically textbook back test. We're in a bull market. We break down. We threaten the bull market. We confirm into the bear market. We back test the 200s to make sure we're in a bear market and that this asset sucks now and nobody wants it. And then we continue on to lower lows. So that's what seems most likely to me. Potential move back up to like 2250 before eventually taking out our lows of 19 whatever. So LNG, okay, so Cheniere Energy, we've been looking at this as a proxy for liquefied natural gas in the United States. We got our target. We hit our target. We broke back down. We hit the back test of the 200 exponential and simple, the 0.5 of the green fib from 2022 lows in July right here to the all-time high. The bearish divergence played out. This is it. This was the move we expected. This was the move we wanted. So the real question is now, do we take a bite at this thing? So if we say that wick down here was the low, what are we looking for? We're looking for a bounce back to the 0.5 or the 618. So potentially entering a position essentially where we're at right now, potential back test target to the upside, 9.9% or 12.6%. And then after that, we see, do we consistently continue to put in lower highs and lower lows? Do we start looking like the rest of these assets right here? Or is this a back test of key support and then we go higher? Well, as long as we're in a bull market and we're above the 200 exponential and simple, in my opinion, it's a buying opportunity. It's the best buying opportunity because we're getting it at fair value in comparison to the previous 200, in this case, days. Based on the 200 exponential and simple, we were fair valued right here in 2022, July. We've been overvalued the entire time, and now we're back to fair value again. Prior to that, we were overvalued for, since November of 2020. So we've been extremely overvalued. The last time it was fair value, we shot up afterwards to new all-time highs. And now here we are, fair value again. Could this be the big change where all of a sudden, hey, actually, we're going to start breaking down below here and start going into the bear market? Sure, definitely can. But, buying 200 as support is a strong part of the strategy, in a bull market. And then occasionally being wrong. And the beauty of buying the 200s or selling the 200s in a bear market, obviously buying the dip or selling the rip. The beauty of using the 200s is you're going from fair value. So if I just decide, hey, I'm going to buy Cheniere Energy, ticker symbol LNG up here, and I'm way above the 200 moving averages, if we revert to the mean, which eventually, statistically, we will do, if we revert to the mean, you already overpaid by a shitload. So you just got a bad entry. Good business, bad entry, in the words of, the Buffett man. So you're already 16% down just if we return to fair value. In the same way, if you can buy under the 200s, you can get a deal and then we return back to fair value. Even if you're in a bear market, you're playing that reversion to the mean. But if we overpay right here, or if we try to short well below the 200s, let's say we decide we're going to short down here. We're like, oh yeah, this thing's trash. It broke down from key support. Where you short it, it's going to go down here. Well, the problem is, if it just returns to fair value based on these moving averages, your short's already under position or under water 15%. So you could have the right idea, but a bad trade because we come down here, you short it and then we move back to fair value and then, smart people short it and then we break down after that. Well, you're going to have to sweat that 15%. So the truth is the 200 moving average is basically just the SR flip. It's the support or resistance. So if we're in a bull market, it's support. If we're in a bear market, it's resistance. But either way, whether you're bullish or bearish, if you take a position at the 200s, you're buying it or selling it at fair value, and then you're betting on the direction. You don't have to worry about overpaying or, shorting at the bottom because it's fair value. Now, could it happen? Sure, this could be the bottom. It shoots to the upside. You took a short and it goes against you. Sure, you take a long right here and then it just capitulates through here. You try. But the difference is the most important thing, and the reason these SR flips are so important. When we look at this chart specifically with no lines on here, it's very obvious. This was resistance, resistance, resistance. We broke through it. Support, support again. And now we have a bunch of confluence with the 200s. So that's the SR flip. So we can run a tight stop loss because that's really what it's all about. That's what the SR flip's all about. It's about the stop loss. Because the truth is, we could short wherever we want. We could short all the way up here. We could short all the way down here. We could short wherever we want. But once we enter into that position, you have to worry about the drawdown. So sure, maybe you short the 200 right here and you say, hey, it's going to go down from here. And, I'm not going to use any leverage. So I'll just hodl until it goes down. Well, you're going to hodl a 51% drawdown. And then eventually, maybe you're right. And then finally, you're back to even after being 50% underwater for a month after month after month. And then eventually you're right. So your timing was wrong, but the direction was right. And as long as you had the balls to hold your position at 51% loss without closing it, and your conviction, eventually you're right. Sure. And it's the same situation right here. Maybe you shorted right here, maybe you long right here, thinking we're going to break out. I'm going to short right here, I'm going to long right here. And then you don't know which way it's going to go. You had a drawdown, and now you're back to even. So are you excited to get out of your trade now? Or do you just have even more conviction and this was, a fluke, and now we're going much lower? So, a lot of the game is honestly just picking good entries or fair value entries and then just fighting your own psychology. It's hard. I don't like holding things that are down 50%, so I choose not to do it. Other people maybe don't give a shit. But that's a key way we can use, essentially this area on a lot of these charts right now, these SR flips, these potential, either bull or bear market flips to our advantage, and just run tight stop losses and just say, hey, I'm going to bet on direction. Maybe I'll bet on both directions and just see which one takes me out of the trade first. If you have 20% target in either direction, but a 5% stop loss in either direction, you could enter a short and a long at the same time. The 5% stop loss on the direction you're wrong about takes you out, and then you're on track for your 20% gains. Obviously not financial advice. So Mosaic next, a little fertilizer action. So threatening the lows right here. You guys know my target on Mosaic. We're confirming into the bear market is down here. This was a strong narrative. Everything was already priced in advance. Now it looks like a giant descending triangle, at the top of a parabolic run to the upside. So we confirm into a bull market back here in 2020. We confirm into a bear market right here. We're threatening the lows. We basically had a nice bounce back to the upside all the way to the 0.5. Got rejected. We had a target actually. Oh no, we did make it to the 618. So we had our target up here to the 618, made it up to the 618, got rejected, and now we're threatening the lows. So if we do break down from these lows, the next key area we're looking for is our macro fib down here at about $32. CCJ, confirmed into a bear market right here. Still have targets down here in the 16, 17 range. We did most of these. There's already a long-term technical analysis video on this. So Tilray, I've been requesting / predicting new all-time lows on Tilray for some time. Obviously, we were able to capitalize on that nice scalp move to the upside. Didn't get greedy with it, took our profits, and now here we are at new lows. We're pennies away from new all-time lows. So, I don't want to get too greedy on this thing, but I mean, literally pennies away. So we're at 258 right now, and the all-time low is 246. So what happens when we get down there? Do we find support, or do we see a true capitulation? We'll have to wait and see, but this thing's just been melting down. Pot stock's just been getting absolutely destroyed for a long, long time. So I would just count on that continuing. We had a strong fundamental argument. We looked at some nice technicals, been able to capitalize on quite a few scalp trades. But the truth is, anybody that was fundamentally long on cannabis is just not doing well for the last few years. And that's in the middle of the most massive bull run of all time. And by bull run, I mean giant bubble. So UNH, so we don't need to go into all of these Dow stocks in detail, but threatening the highs, squeezing into this triangle still. A break in one direction or the other, it's going to be violent. So we obviously want to be on the correct side of that one. Home Depot, so we talked about this key level and how breaking above it likely yielded the W double bottom measured move. It's now not able to do so. We're still above the 200s. If we hold above the 200s, I still like this setup for a return at least to those key levels. Maybe not new all-time highs, but back to those levels. If we break down below the 200 exponential and simple, that's why we have our stop loss where we do, because we don't want to be involved in this anymore. Not particularly great risk reward ratio. It's 2 to 1 from the entry back here at 325. But technically is a bull market, so 2 to 1 is our required risk reward ratio. GS Goldman Sachs attack. We already made it to 200 exponential, expecting slightly lower down here to the 200 simple. Disregard the 5-wave structure. Obviously, it's invalidated, but we're just using it as a cheat drawing tool. Seems like there's still a couple bucks downside right here. Starting to see some signs of short-term exhaustion. Honestly, as long as we're above the 200 exponential and simple, though, this thing's technically back in a bull market. And there's a world where you could see banks actually do well through a downturn. Or maybe we don't have a downturn. Maybe the Fed stops manipulating interest rates or incentivizing banks not to loan. And then banks say, hey, actually, consumers' balance sheet's in pretty good shape. We're just going to be a little more selective about our loans, but we're going to dish out money. The punch is still flowing at the party. And, new all-time highs on the Dow Jones. And it's not crazy to think there's a world where we're at new all-time highs in 2024 on the Dow and some other stuff, but not most of the trash. So Caterpillar looked like it was going to break down here. Instead, shot back up and retested the highs once again. Very, very strong resistance right here. This thing, again, looks strong. What we have to worry about is this symbol right here, signal, whatever. When we have a top come back down, break through the slope line still blue. We come back up, try to retest it, and then get rejected. And on top of that, print bearish divergence. Hasn't happened yet, but, you know, if I told you, hey, every time, you know, there's a break-in beforehand, this series of events happens. So if you ever see this series of event happening, you know, be careful, because there's a high probability someone's going to break into your house. So lock your doors at night or whatever. That's what I'm seeing right here. I'm seeing all the clues tell us there's potential for a breakdown, you know, at least to come close this gap. Doesn't have to happen. This thing might just rip and never close this gap. And, you know, I just look like an idiot waiting for this buy opportunity at 198, call it 200. Definitely a possibility. But McDonald's hit the target, 200 exponential and simple. We'll see what happens with this thing. You know, obviously this has been very, very strong and just straight up and to the right. We're seeing some weakness as of late. This thing basically has been weak, while a lot of the other big names in the Dow have been strong. So definitely curious. Definitely curious. We'll see. I mean, again, you know, every time this thing has come down to the 200s, I mean, obviously we had a little overshoot right here, but the truth is, shortly afterwards, every time it came to the 200s was a buying opportunity. So, you know, if you like McDonald's, gourmet cheeseburgers, and, you know, boneless chicken fingers, here's your opportunity to get all the upside potential with, you know, none of the saturated fat. Is this a good buying opportunity? Am I jumping on the McDonald's hype train? No, I think there's probably a better opportunity. The 200s are nice, obviously, as an entry, but the truth is, when I look at this chart with nothing drawn on it at all, even though I've definitely drawn on this chart before, this looks like the area that we really need to watch. You know, we have this like double top right here. We have the back test, and then we shoot up to new highs. Maybe we don't get there, and this actually looks like really strong because we just have a series of higher lows and higher highs, and we just keep ripping to the upside. I would just be careful of like a wick or a candle back down here to retest these levels just to make sure. Just to make sure. And then, but I mean, the truth is, I mean, what's the difference between buying it at 250 or 239 if we're going to be at new all-time highs soon? Because when they start using approved genetically engineered meat or like recycled, like, I don't know, people or rats or whatever, you know, the future of McDonald's is, you know, this thing's going to skyrocket because their cost goes to near zero. I mean, right now they're barely using any food. And I mean, look at this chart. So when they go to no actual food and just 100% recycled organic matter, I mean, this thing is just going to go, it's going to go straight up parabolic. I don't have any insider information or anything, just hypothetically speaking. Amgen. So we're back down here. We're almost to the entry level we discussed back when. This was what we talked about. If we break out from this, we'd like to get a move back up. Obviously, we hit our first Fibonacci extension right here. Well, almost hit it. And then this thing was looking like a pretty clear distribution top. And now we're back testing that breakout level. So if this level doesn't hold, this is going to look like complete trash. You know, this is basically going to look like a blow off top. If this level does hold, you know, then we can potentially see the fulfillment of the upside target. We basically hit the 1.236, which is the minimum breakout. We come back down, we back test that support, and then we would expect, you know, 1.5 or 1.618 target up here. So 28%. Is this a buying opportunity right where we're at right now, or to become slightly lower to 200 exponential and simple? I would say that's why this is a beautiful trade setup right here, is because if we continue to break down, if we lose, you know, in this case, if we lose 257, our red line in the sand right here, I don't want to be in this trade anymore because it probably does look like, you know, basically distribution, Wyckoff, breakout, fake out, throw over, failed breakout, whatever you want to call it. And then all of a sudden, this whole consolidation range right here starts looking like potential targets to the downside. So, you know, we get in, take that low 4% L, get out, and then we can reevaluate. So upside potential is still there, but we need to hold this level, the entry. But again, you know, it should be a buying opportunity technically on these things. So, you know, if we just continue to stick to the technicals and we continue taking, you know, some longs on things that look good and some shorts on things that look bad, you know, we don't have to be right. The market just is right. And then as long as we took favorable, you know, risk reward ratios, probability of success, all that good stuff, you know, we win. And that's the beauty of like the Apple trade. Like, sure, it looked like, oh, we should have closed the whole Apple trade on the push down. And then it's like, oh no, the Apple trade's going to turn against us. And then it's like, oh no, now the Apple trade looks great. You know, and then along the way, maybe we had a Bitcoin trade that went sideways or some other trade that didn't go in our favor, or maybe it did. But the truth is, you know, you have net long, you have net short, and then play it by ear, let the market decide. Microsoft, we looked at Visa at resistance, descending channel top, fib top, 200s. This is do or die for Visa right here. I mean, if we break out, this thing's going to just surge to the upside and start looking super juicy. But the truth is, you know, if we threaten, you know, if we fail right here, if this gets rejected, we're looking at 15% downside and retest of the lows. Maybe we see a little stall at the 236, but you know, this looks like this move has played out. We have a macro high, macro low. We retested the 618. We're at resistance. We try to break above it. Try to break above the descending resistance. Try to break above the 200s. If all of this gets rejected now, I mean, that's it. That was the play. 61.8% move, and now new lows. So some of these ones, you know, we laid out a couple of trade setups that were looking good for potential bull market flip right here. They had a lot of time. You know, there was plenty of time for the Christmas rally, the year-end rally, you know, the whatever, insert Mad Libs rally adjective here. Didn't happen on some of these. So maybe that was it. That was just, there wasn't enough interest. There's only so many players in the game, and nobody wanted to sit on the Visa chair. Honeywell, holding support for now. Again, we see the W double bottom, the breakout, the back test, it held. Trying to hold up right here. Looks like we're coming down to the blue squiggly, which you guys know what that means. When you see a blue squiggly on the chart, well, you know what it means, so I don't have to tell you, because you know, obviously. It's either really good or bad. TRV, traveler companies, still at the highs right here, holding up. The longer this thing literally does nothing, the better it looks. But really, really got to be careful of the hypothetical scenario right here, which is the green line up and then the green line back down, rejected off the blue slope line, and, you know, bearish divergence printing. We see one drive, two right here, bearish divergence, potentially a third drive of bearish divergence developing, and our bearish divergence signal on the TDMACD. Ruh-roh. So Deer at the highs. You know, it tried to come down here and close that gap once. Is it going to actually come down here now? I don't know. Man. Cat and Deer both look pretty good technically. You just have to look out for this random exhaustion. And what is this all predicated on? Man. I don't know. It's a tough one. Really could go either way on these things. I wouldn't bet against them, I'll tell you that much. Not long term. UUP. So Invesco. So this is, you know, DXY proxy. This is the scenario we were talking about a little bit earlier, where we come down to 200s. You would expect to see a bounce. We don't get it. We break down through them. You know, retest some other key levels. It looks like we're going to go into a bear market. We print a bunch of bullish divergence, and then typically we get the pop back to the upside. And what we're looking for, assuming that was the low right here, is about a retest of 0.5, maybe the 618, maybe new all-time highs, maybe it falls flat on its face at the 382, but some kind of bounce, some kind of pop right here seems likely. And if we're seeing this weakness in the markets as of late, as the dollar just kind of chops around, if we do see strength in the dollar again, I would expect extreme weakness in the markets. So VXX, this is the volatility index. Again, just proxy. So super low right now, hanging out at the lows. The real question is it setting up for a pop right here? I think it is, and it probably corresponds with a retest of the 200s, which I don't know, maybe not though. Maybe it's just up to like 1766. Should be like over at somewhere around like 20% though. 25% move to retest the previous support as resistance, which would line up with essentially the VIX bouncing back up to that target. So definitely some potential here for that scalp play. Lululemon, Carvana, we looked at all these recently. So let's just do crypto and then we'll give it a wrap right there. What do you got? Hour 20? Yeah, we'll take a look at crypto and wrap it up. What do we have? All of our toys. I forgot about the toys from the Christmas stream. Our toy companies. The old Santee competition. 10% for the big guy. No, I'm talking about Santa Claus. So Bitcoin on the daily, looking very weak. There was potential for the 821 bull cross to happen. Rejected. Retesting the previous lows right here. Doesn't look good. It looks like it wants to head back down. There may be an opportunity. Man, it's tough to even try to look for like some bullish divergence or something here. On the 4 hour, this was basically the line in the sand. We tried to cross the 821 back to the upside. We fought to maintain it right here. And then the 821 bear cross took place. We threatened the lows. And now we're flipping the 200 exponential and simple back bearish again. So the truth is, you know, we built a strong case for a potential to be bullish if we're going to see follow through right here. Unfortunately, that's not what happened. So we have to just respect the chart. As long as we're below the 200 exponential and simple, we're not even threatening the bull cross right now. You know, we got to just say, hey, doesn't look like we're going to get that pop anytime soon. Doesn't look like people are interested in Bitcoin. Had all the opportunity in the world for another bull cross right here, another attempt to build some strength and push up here, potentially to the 200 exponential and simple. And it's just not happening. It's just not happening. Doesn't mean it won't happen ever, but it's not happening now. Looks very weak going into year end. Weekly looks absolutely terrible. Very close to confirming a bear market on the weekly for the first time in history. Monthly looks very weak. I mean, I honestly think it's just better for everybody if Bitcoin just retests 14,000 and then we can kind of build some kind of case on a monthly chart off of retesting the 2017, 2018 monthly candle close and then also the wick right here from 2019. But I just don't think there's anybody interested in buying at 16,500 when you've literally had like months of time to buy at these levels. I think we have to hit some other like important technical level. So it does not look good. Momentum to downside. Everything just looks very weak on crypto, unfortunately. Ethereum, not quite as weak because we're not taking out the lows, but still very weak. Just switching out to the monthly here. You know, we're already threatening the monthly close on Ethereum. That was basically what we already did. So Ethereum basically did what I'm expecting on Bitcoin, but months ago. And it's been holding that level, so it looks kind of okay. But below the 821, barely hanging on to that support and not a lot underneath that. The next real target on Ethereum is like 750 if we break down to new lows, which, you know, eventually seems probable. Total crypto market cap, very, very weak, hanging out at lows. You know, if we just close right now, the weekly, we're at new cycle lows, weekly candle closes. Very weak. Bunch of green histograms, trying to build momentum while we just continue to go lower. You know, that's basically a bearish reset happening in real time. You know, price action continues lower. Indicator oscillator continues to the upside. So eventually when the bears take over again, right now the bears are just chilling and price is going lower. If the bears start coming in again, you know, kicking ass and taking names, and the momentum starts shifting back to downside, and we're already at cycle lows, where does that put us? Substantially lower. Substantially lower. Bitcoin dominance on the weekly with stable coins, very close to confirming 821 bull cross. Without stable coins, already confirmed the bull cross, already had a nice strong move to the upside. Seems very probable we retest the ascending line in green and then probably the previous high, telling us that, hey, when we remove stablecoins from the mix, altcoins are getting weaker compared to Bitcoin. Altcoins are trash and Bitcoin is amazing based on, technical analysis. Really, it's just degrees of trash, okay? It's like the altcoins are like really old food garbage at the bottom of the can from like a whole week of not changing it. And then like Bitcoin is like a gyro with like 3 bites left in it, kind of sitting on top with the flap open. And there's a couple flies on it, but looks sort of fresh. Both really shitty. Just, obviously one is worse than the other. But both really, really shitty. And you don't want them at all. Not even a little bit. So cheese, we talked about the potential scalp off of that support area down here. Obviously just blew through that. The broadening wedge, green support, red resistance is dead. Obviously breaking down from that level. Not good. This thing had all the opportunity in the world to flip bullish. We did break out of this descending channel and it's testing that. There's a lot of support right here, but I don't know, man. It's tough to speculate on any of these like trash cryptos right now, which just might be amazing. I used the term trash just as an example from the food, from the gyro. Not good right here. Couple percent off the lows. Had a lot of opportunity and lost key support. I gotta say, there's just no reason to touch these things right now. Solana just completely melting down. I guess they're still talking about this on CNBC. I don't know why. They should just like look the other way and, maybe just buy it at Tombstone because this is a dead asset. Broke down to new cycle lows. Just every day, it's just like new lows. This was a nice capitulation wick right here. I'm sure somebody out there who's just hodling Solana waiting for new all-time highs. 12.5% day. Not bad. Not bad. I mean, why not just buy Ethereum? Because Solana's the Ethereum killer. No, Solana is the wallet killer. Because all this thing does is destroy your money. Ethereum at least holding up. This thing's absolute trash. It just lost to 1.236. So, 1.382 or 1.5 next target. That's it. It was double digits. $10. $10 holla. Now it's 1. It's 1 digit now. So see at 750. Another 33% downside just to get to our next target. Not even going to be the macro low because this thing's going to 0. Chainlink not looking so hot either at the lows. I mean, this is just, it looks like it wants to lose this level. It's got a little bit of support at 450. Again, had all the opportunity in the world to get back above the 200, start moving to the upside. It's just not doing it. Avalanche, new lows, new cycle lows, $11. This thing's going to be single digits very, very soon. Complete trash. 1.382 is at 1030. Just another one of these fake trash cult coins for suckers. You're like, don't be mean. Sorry, but it's true. Polkadot, again, just melting down. Next target is $3.65. But, I mean, we know all of these cryptos are trash based on technicals. So even if you're like, but it's changing the future. Who cares? It's trash. It's complete trash. Stop hodling to 0. Or eventually you'll get your wish. Matic, looking real weak right here. I mean, it's a lot better than most cryptos. It's trying to hang on to 200 exponential simple. Trying to hang on to 382. But, I mean, it really looks like 53 cents. Is the next target. So, we looked at this potential opportunity for another little scalp back to the upside. Doesn't look good. Could go either way. Maybe all of a sudden this thing just shoots to the upside. We see some bullish divergence on the indicator oscillators. If you were going to take a scalp in all of the trash cryptos we looked at, I mean, this one looks the best. XRP losing key levels. We talked about scalping this thing. You know how I feel about this. This is like the meta of cryptocurrencies. Complete trash that I don't want anything to do with. But every once in a while, I'll dip my toes in the water and take free money. I mean, this thing is just higher lows along the way. It's all about if the cult can hold 33.8 cents. Because if not, you're talking about, low to mid 20s. These things look terrible. Cardano, just forever just giving you that sweet, sweet yield while it just destroys your principal. So congratulations. Enjoy. We're almost to the 0.5. We're halfway to zero. 23.7 cents. I mean, we're there now. So what's the next target? You can't just keep picking targets and then we just go lower and then eventually you say zero and we go there too. Wow. I mean, I can. So far it's been working. So I would just expect our next target down here to get hit. I don't know when, but I mean, if you know, this thing is literally like clockwork. All it does is just melt down to zero. Not as fast as it can, though. Occasionally it relaxes. But I mean, it's just slowly grinding down. So when's it going to be at 13 cents? I mean, probably roughly around April 2023. It'll be at 13 cents. So congratulations. You'll have lost another 40% of your value by then. But Charles said he loves us. He does live streams. He can't be a scammer. It's not like those fake Michael Saylor live streams. He's really there. So it has to be legit. Okay. So BNB is the last one. You guys know, obviously, you know, BNB is my little temperature. It's the overall crypto market. And if we do lose this level, absolute death, destruction. We're threatening it right now. So this is it. This is the level that's got to hold. And we're just hanging around. So if we lose this potential support, this potential ascending channel right here, this thing starts looking real, real nasty. If we break down from that blue 236, it's going to look real, real nasty. There's obviously that previous low support at about $1.80, but not much after that. So let's pray it doesn't come to that. Unless you hate CZ and crypto, in which case you can pray the other way. There is that potential long setup too for 60% upside. If you want to be the contrarian. All right, we'll go ahead and wrap it up there, though. Hopefully everybody had a Merry Christmas. If you didn't check out the Christmas live stream, we just effed off a little bit and looked at some toy stocks. So yeah, that was fun. But yeah, about to round out that new year. So we'll have we're still going to do a Friday stream, about 90% probability we'll do one. So I'll see you guys one more time before the end of the year. I do fully expect 2 more people to subscribe to this channel. I mean, it's pretty ridiculous. But we should hit that 1K, which is going to be a big effing deal. Obviously, it's massive. It's huge. 1,000 is a big number. So yeah, if you haven't subscribed yet and you're listening to this, just fucking do it. Jesus. But that being said, go ahead and wrap it up there. Appreciate everybody tuning in today. Hopefully everybody had a wonderful time with their families, friends, animals, old nostalgic Christmas movies, food, whatever it is you take comfort in. Hopefully you got all the comfort and a little extra something too. Appreciate everybody tuning in today. Durwood, Bodie, Big Ass Canvas, and Jay Hoff. Good to see you guys. And to all those silent creepers out there in the shadows, appreciate you all as well. And I mean creeper in a good way. You're my favorite creepers. But yeah, that's it. So remember, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. It is, oh, sorry I was late today too. I was doing stuff and also things. 9:39 p.m. Eastern Standard Time on December 28th, 2022. And as always, I'm Crypto Trend Trader, and I'm getting the F out of here. See you guys on Friday. If not, see you next year. Peace out.